Hey there and welcome. I am Brandon. I've been in the stock market game for a long time, and I'm just going to kind of go over what my thoughts on the stock market are right now and some stocks that I'm looking to buy for myself at the moment, and a little bit about the system that I've used for over a decade that's been the most reliable system that I've ever used. I have tried everything. I've done day trading, swing trading, long-term investing. I do all three still, but by far the most successful for me has been either passive long-term investing in a low-cost index fund or basically this swing trading system that I use that I learned from a multi-time champion trader. And basically it's kind of using the Keltner Channels and relative strength to basically buy dips in strong stocks that have momentum. And just as a quick example, I'm going to take a quick look at a few stocks and show you. But basically right here I have the SPY, and really I've got a couple of lines here. This big purple line is the 200 moving day average. And the red line is the 100 moving day average, and the blue line is the 50-day moving average. In here is these green channels. These are Keltner channels, and they're similar to Bollinger Bands, but a little quicker and tighter, and kind of give you an idea of when stocks are a little bit overpriced or underpriced compared to their average. And usually you'll see right in the middle, this little dotted green line is basically the 20-day moving average, where stocks kind of tend to gravitate towards. And basically if you go back to say August, you'll see we had a dip. The stock market went well below this Keltner channel and basically recovered, kind of rubber banded back to the 20 and kept going. And then it floated above this Keltner channel, which you'll see. And then, when a stock or the market's above this Keltner channel, it's typically not a great time to buy, but it can float and keep rising. But as you can see, went kind of down to that bottom of the Keltner channel, and then basically floated back to this 20 and then kept going to the top. Sometimes when a stock or a market's pretty strong, you'll see it bounce off this 20-day moving average right in the middle of the Keltner channel and then go back up and bounce off this 20. But as you see, for the most part, it kind of stays around this Keltner channel. Usually when there's a big dip below, it's a good buying opportunity, and when it's way above, it's kind of a selling or an opportunity to at least not buy it. Try not to buy stocks too far above the Keltner channel. As they float closer to the middle of the Keltner channel, that's a good spot to buy. But I personally like to buy on dips like this. Sometimes these things still go down even further. But the main thing that gives me the confidence to buy is the fact that this 50-day blue moving average is above the 100-day red moving average. And these are exponential moving averages. They're a little faster than a simple moving average. But basically, they just telling you that the momentum in the stock is going forward and going up. And as you can see, these are nice, healthy, thick bands between the two, and they're just trending up. And the stock itself is above the 200 moving average, and the 20-day is above the 200 moving average. All this tells me that the stock is basically, in the last about month, has been going up more than it has in the last 2 months and the last 3 months. And so all these line up. So the stock's been going up for about the last 10 months, and it's been going up for about the last 3 months, and then it's been going up for the last 2 months, and here we are with the Keltner channel. And basically this just lets you know that you have momentum, and as long as you have momentum, it's perfectly fine to buy dips. Actually, this is what I do. I look for strong stocks with good momentum. Their 20-day moving average is above their 200-day moving average. And of course, this momentum band, this 50-day moving average, is above the 100. What happened kind of recently with, the tariffs and what was going on with kind of how the economy was being viewed is that this 50-day moving average crossed below the 100, which is typically a pretty bearish sign. I usually stay away from stocks when they cross that. That actually caused me a little bit of damage in my portfolio. This was a rough couple of months for me and my portfolio. And as you can see, it was probably rough for a lot of people. We went all the way from about 615 on the S&P all the way down to 480. And we bounced and pretty much V-shape recovered here. And I'll admit I didn't participate in the recovery the way I should have, because my indicator was basically telling me, hey, the 50-day is below the 100-day. The 20-day moving average is below the 200. The stock itself is below the 200. So all these are very bearish usually, or at least red flags. But we did seem to capitulate and recover. And we've bounced all the way back up to about almost 600 on the S&P, and now we're kind of bouncing up and down and around. There seems to be some, as the pros call it, liquidity, basically sellers right here. We'll see if we kind of break through that and get back up to all-time highs, and then break through probably eventually, at least according to Tom Lee, who I really respect and follow. And one thing I'm noticing is this 50-day moving average has just started to creep over the 100. And that kind of is a very bullish signal for me. And that kind of means that basically it means I'm going to be a little more aggressive in buying. But still, I'm going to buy stocks that are good values to me as far as where they're at on the Keltner channel. The other thing is, finally, the stocks are above the 200-day moving average, the stock and the 20. So everything's kind of lining up. The 20, the 200, the 50, the 100, all these moving averages are lining up. So that's basically why I'm moving forward. Let me show you an example of, say, a stock that isn't necessarily lined up. Right here is Google. And you basically can see, just as a quick example, here's that 50-day moving average. It went under the 100. It's still under the 100-day moving average. And you can see the middle of this Keltner channel, this green Keltner channel, which is the 20. That's below the 200. And then now the stock, it did finally get over its 200 moving average, but it's back below. All these things are things that are making me leery of on a stock that I'd love to buy. I think they've got some excellent AI innovation, and although there's some question marks about their search business because of AI, I still do personally like it. But let me show an example of a company that maybe is a little healthier. Meta, also a company that's really pushing their AI innovation as far as they can go. And basically, you can see this 50-day moving average, it's just starting to creep and pass over the 50 days passing over the 100-day. And they're both above the 200-day. And this 20-day moving average is above the 200-day. And the stock itself is above the 200-day. So everything's lined up on Meta. And I would call that they have the momentum, the power trend everything that I'm looking for, both long-term and mid-term. And so as Meta would dip down in either into the middle of these Keltner channels, which would be a fair buying price for me, or as it dips down into the lower end or even below, I'd have the confidence to buy the dips because I think the momentum will keep it going. And so with that said, I basically have come up with about 6 stocks that I'm looking to buy. They're stocks that I've liked, that have been strong in the past, and they do have the momentum, and right now they're just not doing so well, and they're dipping. So typically when I buy a stock like this, I know I have to have a little patience. In a strong market, you can buy a dip like this and the stock might recover literally in a few days or a week or a couple of weeks. When you buy dips on strong momentum stocks with a trend like this, you're probably going to see it take about a month or two sometimes to recover. But the positive thing about this is you can basically set your stop losses fairly tight. Looking at these, and you can kind of let them run too for a while as they gain their momentum again. So they're kind of just taking a breather, in my opinion. If they lose that momentum, if they kind of dip a little bit too much, sometimes you'll take a loss. But I found this to be the highest percentage, highest winning system with a little patience. This really works with positional trading, where you maybe are making trades 3 or 4 times a year, and you're just trying to find good positions and good buys. This is a tremendous system for that. In that case, you want to let your winners run and just keep the stocks going as long as they have that momentum. Or you can do it as more of a swing trade, where you're just kind of buying at the bottom of the Keltner channel and kind of trimming or selling at the top of the Keltner channel. And both systems work. I find positional trading to be easier and probably more profitable. I'll give you a quick example of a stock that I took a position in, Philip Morris, and it did really well for me. I recently just trimmed and sold the options I had on it. And basically, I had bought this stock down here at this dip. Philip Morris was a company that, it has been strong. It has had the 50-day above the 100-day. Everything's above the 200-day. And it's just been strong and for a long time. And it was a stock that I just decided, well, next time it dips, I want to buy it. And basically, it was right up in this area. It dipped. I started nibbling on it, and then it kept going. Kind of held on to the positions a little bit. And then right here, I saw that, hey, the stock, I want the stock, but it just looks overpriced. I'm not going to buy it. It's above the Keltner. I'm going to wait for it to dip. And it did. It actually dipped. It spent about a week or a little more than a week going down. And once it just showed a little bit of green and started kind of showing that the recovery, and this looked like a decent level actually. I bought it here. I bought options on it, longer term options, which I just sold today. So it was a little bit more of a trade. But basically it took off and went all the way up and all the way above the Keltner channel. Today was kind of a wicky day. It was real up and down. I lost, the value of my options had gone down about 10%. And I personally believe in taking profits on options quickly. I'll let stocks run a little bit more, but options, I usually want to take them off the table. I've had too many times where I've had huge profits on options and thought I'd let it run, and then stocks reverse and I lose, half the profit on my options. I'd rather kind of take profits quickly on my options. This is how I personally trade. It's not advice for anybody. And so basically today I sold the Philip Morris position, but it was an excellent trade for me, basically buying this strong stock. So as soon as this stock dips back down towards the bottom of the Keltner channels, I'll be buying it again. And there's some stocks that I've done really well on right now that are on my list. And basically here they are. Uber is a stock that I like. I think it's got a good business, and it's in a nice sweet spot. I don't really think that it's going to be affected too much by tariffs, and even in a down economy, I can still see people using the service. Maybe they even use it more if they aren't buying cars and paying huge insurance premiums. But basically, this has been a strong stock. It finally recovered right around here where the 50-day and the 100 days start crossing over the 200. The 50 was above. It still was rocky. It's been up and down. We had our April dip, but it's basically gone straight up since this April dip. And the 50 is above the 100-day moving average. The stock itself is above the 200 moving average. The 20-day average is above the 200 average. Everything lines up for Uber. It's just been down in the dumps for the last month or so. And it might take a month or two or so to recover. The great thing about this is I can just be tight with my stops. I see there's a kind of a wicky candle right here. I could put my stops right here around $79.50 or $80. Kind of looks like a decent kind of support level as well. I could be really tight with my stops. I typically am not too tight with them because I'm willing to kind of risk a little bit because it will bounce around and go up and down for a while. And I'm not expecting it to be a home run immediately. I think it's going to take a couple of weeks or a month for it to kind of find itself, find its bottom. And then with this momentum, it'll start going back up. That's really where I've kind of earned my bread and butter. So right now I'm going to put I'm writing in where I'm going to put my stop at about 79.50. I could be even a little bit more loose if I wanted to, but I find that if you go too far below the Keltner channels, it could be a sign of weakness. So you don't want stocks that just tank and crash and burn. But if they're floating around, look at it here. It went below the Keltner channel pretty decent and then recovered. Right here it floated towards the bottom of the Keltner channel and recovered and went real high. Right here when it went so high it gapped, had a huge candle and then a little bit of a wick here and then a capitulation kind of almost like a spinning, almost like a doji candle here actually. This would be a spot where I would have sold. And basically, I think I did actually in the stock previously. It was just well above the Keltner channel and kind of was showing a little weakness. And I was right. It went all the way down here. And then this would be a great area to buy it. And now, as you can see, it went lower. So, it's likely you could have bought it here with a stop, say, lined up to this area. So it might not have stopped out here, but it would have stopped out here, and you would have had a little loss. And sometimes that's okay. But imagine if you were up here, and it went all the way down to here. That's a big loss, all the way from 87 down to 60. So selling up here and then buying back at like 70 and then losing it down to 60. That'll happen. Once in a while. But as you can see, it lost its momentum. It lost the 50, went under the 100 right here. It did recover. It was still not a buy because of all the 50, the 100 really didn't line up. But right here, the 50-day moving average crossed over the 100. And the stock itself was over the 200. So everything started lining up again with the momentum on the stock. It bounced around. We had our tough little April dip. Now, this hasn't been a great stock. You see it's kind of up and down, up and down. It's a little bit of a volatile stock. If you really want to increase your percentages a little better, you want to kind of try to find stocks a little bit more like Philip Morris, where they're just kind of steady climbers. Going back to Philip Morris, you can see it's kind of up, then it kind of goes straight, then it goes up, then it dips a little, but it's not wild. It's not heading up and down. Here it kind of just started going crazy up. But you can find stocks like that that are a little easier to trade. They're not so wild. You don't get stopped out as much. But I still like Uber. I think it has a lot of upside. I'm going to put my stop around that probably, right? 79, 79.50. I'm willing to risk $3 or $4 a share. I may or may not buy longer term options on it. I kind of got to think about that. I think it's a little bit too wild of a stock for me. I'd rather buy something that's a little more steady if I'm going to buy some options. But I think it is worth a little bit of a chance with the stock. I think it's got from what I've experienced, a high percentage play. Another one's TJ Maxx. I've always liked this stock. It's a little more steady than Uber, and as you can see, it's always seems to be going up. 50 days over the 100, a nice thick band here, and just nice steady eddy. It almost lost its momentum right here. The 50 almost went under the 100, but it kept it, and it's kind of rebounded and it's opened up. It was doing really good. As you can see, it was way above the Keltner channel. This might have been a day I might have actually trimmed the position or sold if I had options, and then it's kind of tanked since then, and it's recovering and it's kind of holding its base right here. So this is what I like, and it's been recovering for I don't know, a couple of weeks now. So I think again, it might take a while for it to go back up, maybe a month, maybe a couple of months, but you can right now this is something where I might want to add into this position, or maybe buy options on, but I'm probably going to put my stops right here in this vicinity under this 100-day moving average. Seems like a logical spot, and then I like to give it a little bit of wiggle room, so I'm probably going to put my stop at about 123 or something like that. I like the stock. I think it's a decent stock, can take advantage of if inventories get a little high for companies. And it's just been a good winner for a long time. Here's another one, MicroStrategy. I like Bitcoin. I like investing. Bitcoin trades really well on this system. And as you can see, MicroStrategy's been a strong stock with the 50 above the 100 and the stock price above the 200. And just steady eddy. It kind of really rose way above the Keltner channel here. This would have been a perfect time to sell it. As you can see, it just kind of flagged all the way down. It's kind of built a curve back up. Looks almost like a cup and handle right here, which is a nice pattern, a big fat cup. It's got a little handle and it's going up. So I need to hurry up and buy this stock. I'm going to definitely add this. The stop can again be around that 100-day moving average. It's going to be nice and loose, around 330, something like that. Doesn't have to be exact. Just give yourself enough wiggle room. And if there's, if there would have been anywhere, there's a lot of volume on this area, but what kind of naturally lines up is around here. And that kind of lines up with the 100-day moving average. So that's a nice stop. You could be a little tighter if you really wanted to be tight. You could raise your stop up to like 350 and be real tight. I found that there's just no reason to be too super tight with some of these stocks around that Keltner channel, because they do bounce around. 100-day moving average, when in doubt, is a pretty good spot to put a stop. And it also depends, are you position trading 3 or 4 times a year? Or are you swing trading? And this is actually a great way to day trade too, because you kind of get a thesis. Well, hey, right now the stock's at about 390. I think it could go up to about 425. That's where the top of the Keltner channel is, and so and it's going up. So this is kind of a good way to have a thesis for day trading. Hey, if I wanted to day trade MicroStrategy, I'm going to be bullish on it for the next couple of weeks. It's towards the bottom of the Keltner channel, so it's a good spot. And I think it could get up to about 425. There's usually this spot, this 20 moving average. Just keep in mind, that's kind of like a line in the sand, a soft line in the sand, where if you get over it, it's pretty bullish. As you can see right here, the stock was battling this 20-day moving average, and then it popped over it. And it kind of floated and used it as support and then took off. And you see that a lot. This 20-day moving average is really an interesting tool. So we're right there. It could get rejected and bounce back down a little bit, but it'll eventually, probably, assuming Bitcoin goes up, it's going to go over that 20 and then probably take off. And now you got this cup and handle, and this thing looks pretty good. I need to buy this quickly. And this is not a recommendation. This is just me telling you what I'm looking for and what I'm buying. And I'm going to have more videos on my system, but I've been doing it for over a decade, and now I've done thousands of trades with it that have been successful, and now I feel confident enough to share this with people. Here's Kingsoft Cloud. This is an AI or cloud company in China. It's just a good example of a strong stock. The 50's over the 100. And whether you believe in this company or not, it's somewhat speculative, but it's been strong. It kind of has a similar pattern to MicroStrategy. It ripped way above the Keltner and then has kind of flagged out. It's kind of got this cup pattern, but it doesn't have a handle. It's kind of trended down. So this is one that maybe if it shows some strength, I might buy. If it kind of has a nice strong green day or a couple of green days or a red green type pattern coming, and it shows some buying, maybe some buying with some volume, or has a nice candle day, I'll buy it, because I think it's probably going up. And this is a nice support level too. I mean, right here you can see it's been hit, 1-2 times before. So, right around here in that $10.50 area. If you kind of go across, it seems like it to be a decent spot. There's a lot of volume on this day right here, which is interesting, and yet it held. So I think like 1050, if it breaks 1050, I have a feeling it could head down lower. So I definitely put a stop here. If the stock kind of shows some strength and starts having some green days in the next, anytime in the next week or so, I think I could jump on it. In the meantime, I'm just going to make a note that I'm going to put my stop at about 1050, pretty tight, because I think if it breaks this, it might not be able to hold it. Now, I will say this. One thing I've noticed about stops is there's something called a liquidity sweep, where stocks will tend to kind of go a little bit past that stop point, just to kind of, probably market makers trying to grab people's stop losses, and they can see your stop losses. So that's why another reason I'm fairly loose on my stop losses. If I put it tight right at this 1058 level, it's very likely that this stock will have a quick little sell-off, go down to like 1025, 10, grab everybody's stops, and then buying will come in and it'll start going up. So maybe with the stock, I might be a little more loose, maybe even put the stop around, $10 or $9.99 or $10.05, whatever it might be. But maybe be a little looser just so I don't get hit with the liquidity sweep. But then again, I think for me, I kind of like to see something have a little strength before I buy it necessarily. So I'm going to wait for it to have a couple of green days or a big, nice, strong green candle with some volume or something that'll make me want to buy it. And then I can put my stop there, and I don't have to worry about it necessarily going down. So I don't want to bargain shop too much, especially with a speculative stock like that. If it was a really good company like a Google or a Meta, something like that, I'd probably be a little less worried. Usually buyers will step in. But it is a Chinese technology company, so some risk there. McDonald's is a stock that's been strong in the past, and it had a huge dip last year and then kind of recovered. And you see it lost its mojo big time. It was well below the 200-day moving average. The 100-day was above the 50, but this 50-day moving average crossed over. And then it crossed over the 200, and the 100 crossed over the 200, and the stock went above the 200, and the 20-day went above the 200. So everything started moving up, and then it's kind of flatlined a little bit. It almost lost its mojo right here. The 50 wanted to go below the 100, but it didn't. It recovered. And so now it's widened out a little bit, and it's got a nice band there. The stock's above the 200, and the 50's above the 100. It's floated towards the bottom of the Keltner channel. It's a decent buy. Might put my stop at around 305 or something like that. And it's kind of got this trend where it goes up, consolidates sideways, goes up, consolidates sideways. It's not that strong of a stock. It's one I'm considering. I'm not sure I'm going to necessarily buy it, but it is kind of a slower mover, which is nice. And it's not that wild of a stock. But if you follow the Keltner channels and look back, you can see it had a huge kind of candle up to where it went up above 325, above the Keltner. And, this might have been a place where you take profits or trim the position. And then it slammed down to the bottom of the Keltner. And you could have bought it down here. And then it went back up towards the top. And you could have sold it here and down below. You could have bought it here. So that's kind of how you day trade. You can day trade these kind of patterns or swing trade these patterns short term. Or you can kind of look at it as kind of a position. And you can start building a position here while it's down. Or you can kind of midterm swing trade it, buy it here and kind of see where it goes, trim a little. So there's a lot of options you can do. It's an expensive stock at $300 to buy options on, but because it doesn't really swing too crazy, it might be an okay one for me to buy options on. Again, this is not advice for anybody. I'm just kind of going over a system that I've used for many years that's worked really, really, really well for me. Here's a stock I really do like. I like insurance stocks. I like some of these more safe, what I consider to be safe stocks, like companies like Waste Management and Kroger, and they're a little more conservative. I think they're a little less susceptible to crazy tariffs and geopolitical events and the economy, and they're not staples, but they're kind of these services areas that I think are fairly insulated even in a somewhat down economy. So Progressive's been an insurance company that's done really well. The 50-day has been well above the 100-day, nice and fat and strong up until this point. And then as you can see, it kind of right here, it crossed back, and it could have lost its momentum there, but it kept it going. The stock itself has been above the 200-day. It's just a nice, strong, uptrending stock. Now, you can see it's not at the bottom of the Keltner channel, so it's not a great buy. Typically right around here, around this 275 would have been when to buy it, and this would have been a great opportunity. I think I bought it in the past at around this 260 mark. But middle of the Keltner channel, inside the Keltner channel, anywhere in there is an okay time to buy if you really like a stock. It's been strong. It's kind of dipping. I might just add to this position a little bit. I have a very tiny position in it, but still, it's one of many stocks that I own. But it might be something I want to add to right about now. Or maybe I'll keep an eye on it, see if it floats down towards that bottom of that Keltner channel, and I'll buy some more. You can have a lot of patience. I like a stock like this. It's well rated if you look at its ratings with companies like Schwab and Morningstar, and it's got excellent rating. It's one of the stocks that I kind of like, and basically it's one I want to buy, but I can be patient. I can wait till it goes down to the bottom of the Keltner channel. It will at some point eventually, as you can see. It always does, and then it always comes up, above that Keltner channel too. So, I think it's a fair buy here. It could break out of this area, so I got to kind of consider that and think about that on whether I want to buy that stock or not. I'll give you an example of a stock that I like that just isn't buyable right now, and it's Salesforce. I mean, Salesforce has got excellent ratings across the board, but it's a good business. They've got an AI business that's doing well, but as you can see, the stock it really it seemed to be doing well. The 50-day crossed over the 200 and over the 100 here, and it had the mojo, but it lost it right here. The 50-day has gone under the 100-day, and then the stock itself went under the 200-day moving average, and you can now see this 200-day moving average. It just acted as a complete resistance or liquidity. People just sold. So, these people that were down here in the dumps, when it came up here, they took the opportunity to sell it right at about that 200-day moving average. So it couldn't get over the 200-day moving average. And the 100-day moving average is above the 50, so it couldn't kind of flip it up. And so it's kind of in the dumps. Now, in another month or two, if it kind of goes up and starts moving in the right direction, it could kind of start trending, and that 50 could flip over the 100. I could definitely see that happening. But right now, this is a stock that I like, that I'm staying away from. Now, on the other end, a really solid stock that I like is Johnson Controls. And as you can see, this has just been a super strong industrial stock. I know a lot about this company, actually, because I used to work for them. But basically, it's a strong business. They do all sorts of, they have several businesses that engage in engineering, manufacturing, but their big thing is buildings, systems, buildings, products, and building solutions. So they have all kinds of really neat innovations and technologies for building efficiencies and giant buildings, skyscrapers and warehouses and arenas and stuff like that. But the stock right here almost lost its mojo. The 50-day moving average almost crossed down below the 100, and it turned around right away, which is a good sign. And it's been strong ever since. I just haven't had a chance to buy it because it's been above the Keltner channel too far. It's been way up here, staying up strong, and then it gapped up, staying up strong, and it almost dipped into the Keltner channel, but boom, it's up strong, and this is a super strong stock. It does not want to go back down into the Keltner channel. So this is on my list, my hot list of, hey, when this does dip down below the Keltner channels, I'm going to jump on it. Another example of that is like Microsoft. This has just been, it finally flipped the 50 over the 200 and the 100, so it's finally got its momentum back just in the last month or two and is buyable. And it's got great equity ratings and from Schwab and Morningstar and CFRA. But basically it's just been too much above the Keltner channel to buy for me. Too risky. I can't. Where do I put my stops if I'm buying up here? My stops would be down here. It's a lot of risk. But it's kind of flattening out. It's basing out. So if that dips back down, I'm definitely going to try to buy that. Nvidia is another one. But the stock is above the 200 moving average. It has just barely crossed over. The 50-day moving average, as you can see right here, just crossed over the 100-day. So I can finally actually put it to my buy list for the most part. And the stock itself is above the 200-day moving average. And this 20-day moving average is above the 200 moving average. So everything lines up. The momentum is back. I'm not going to buy it up here. I'm going to, again, wait for it to dip back down. But as you can see, finally NVIDIA's back. And, in my list of, stuff. I've got some other really great stocks. Let me give you a couple more that are just on my wish list. GE, great company. They basically make aerospace products for aircraft engines and components and electrical power. And I really like this business. I've made very good money with GE over the years, kind of doing this system. It's a nice steady stock, and it's got everything lined up. The momentum, the 50 days over the 100, the stocks over the 200. It's just floated above the Keltner channel. There hasn't been really any buy opportunities. If it kind of comes back down, it's on my wish list to buy. Here's another one that I absolutely love, GE Vernova. They basically make energy and electricity systems. So they do like gas, nuclear, hydro, steam, all sorts of turbine technology. Just very interesting stuff. It's a great business, especially with all the data centers and AI and Bitcoin and everything that's just sucking up all this electricity and energy. But this has been a steady Eddie, just like GE, and it's just right above everything in the Keltner channel. It just has not been a buy lately. You see right here, it almost kind of lost its mojo, but it kept it. The 50-day almost went below the 100, but it didn't. It curved back up, so it's nice and strong again. And if and when that thing ever dips down towards the bottom of that Keltner channel, I'll be buying that. Another one is CoreWeave. Now this is kind of doesn't have as much data. It's a newer to the stock market, but everything is strong, everything is up. It's just well above the Keltner channel. Another company is Howmet. They're also in the aerospace. Kind of looks like GE, so when that drops, it's very strong. 50 above the 100, everything's above the 200. Another one that I really love is Hood. Robinhood is a great business. Look at this cup and handle. It's breaking out. I can't buy breakouts. That's just not what I do. But for somebody that day trades or traders, they absolutely love these kind of breakouts. So it's got the 50-day above the 100-day, the 20s above the 200. The stock price is even above the 20. Everything's lining up strong. It's heading the right direction. Another one that's interesting is Dollar General. What a great stock this has been recently, and what a horrible stock it's been lately. So as you can see, I mean, it just had nothing going for it. It was below the 200-day. The 100-day was above the 50-day. So it had no momentum. It had everything in the dumps for a long time. Nothing was working out for the stock. It kind of bottomed, kind of gave this circular bottom pattern, and then all of a sudden the 50-day just cracked over the 100-day pretty recently in April. And then they both went over the 200-day. So the stock itself is above the 200-day moving average, and the 50 days above the 100-day. Finally, this is finally a buy. Dollar General is a stock that has been in the dumps for so long, and it's finally something that's a buy now. Look how far it is above the Keltner channel. It looks like it's kind of has a big wick here, and it might come back down to earth a little bit, but this would be something that you'd consider buying. And these are all just excellent stocks. I have a long list of stocks. I'm just going to look at a couple of ETFs, because if you don't want to necessarily trade stocks, maybe an easier way is to look at some ETFs. I'm just going to show you a couple ETFs that are just what they look like. Momentum, MTUM. This is one of my favorite stock ETFs. It trades a basket of basically stocks that are doing well with good momentum. So it's trading momentum on momentum. So it's had a nice 50-day over the 100-day pattern until that it just got kind of crushed. It went all the way from 230 down to 170. Got crushed during the whole April sell-off, but it's recovered. It's had a V-shaped recovery. And then right now, that 50-day has gone over the 100-day, and everything's above the 200-day moving average, and the stock is super strong. And this is really something that's big time on my list to buy. I'm going to load up on it when it kind of comes back down, maybe to the middle or the bottom of the Keltner channel, to get a decent buy on it. But everything looks good. There's other stocks just like that. The Qs haven't done that yet. That's why I haven't really bought them. I have a bunch of price levels in here, just kind of tracking how wild it's been. So don't get too caught up in all this, but basically you can see everything's tied up right in here on the Qs. Now I think the Qs is one of the best investments for me personally, not necessarily giving advice, but it's one of the things that I'm always looking to buy whenever I can get a chance. And as you can see, the 50-day has just crossed over the 100-day about a week ago, and it's trying to just have those go above the 200, right? Now the stock price itself is above the 200, and this 20-day moving average is above the 200. So basically, it's all green go. Finally, can start buying the Qs. In hindsight, could have bought them earlier, but really that's a pretty risky way to go. But basically, that's the Qs. And so we've gone over quite a bit of stocks. We've gone over the MTUM and the Qs as far as ETFs, and then my big picks that I'm kind of looking at, which is Uber, TJ Maxx, MicroStrategy. The ones that kind of appeal to me the most is, if I want to really kind of be speculative, is this MicroStrategy. Looks pretty good to me. It's just starting to turn green. It's got a cup and handle, and the momentum's in its favor, and it's a wild stock. It can make you a lot of money fast. So I'm going to jump on that one, and the other ones are Uber, TJ Maxx, looking at Kingsoft Cloud, looking at McDonald's, Progressive, and Dollar General's now on my list. So went over a lot of stocks with you, went over the system. If this is a video that you liked, please leave a comment. Let me know what you liked about it, what you didn't. And if you'd like to see more, I do want to kind of do some videos and go over my system. And it's been so good to me for so many years. And I've tried everything. And this is the one thing that's just been so steady for me and worked for me. So if you found this helpful, just give me a likes and give me a comment. Thank you.